Hello everyone. Welcome to the Stock Minds web channel. Alphabet Inc., NASDAQ, Google, the parent company of Google, has once again demonstrated its resilience and growth potential with a robust Q1 2025 earnings report. Despite facing legal challenges and economic uncertainties, the company delivered impressive financial results, reinforcing its position as a strong investment opportunity. In this video, we will dive into Alphabet recent earnings, stock performance, growth potential, and the risks investors should consider. About Alphabet. Founded in 1998 by Larry Page and Sergey Brin, Google has evolved from a search engine into a global technology conglomerate. In 2015, the company restructured under the umbrella of Alphabet Inc., allowing for greater transparency and focus across its diverse business segments. Alphabet's portfolio includes Google Search, YouTube, Android, Google Cloud, Waymo, autonomous vehicles, and various other ventures in artificial intelligence, healthcare, and more. Alphabet financial performance. In Q1 2025, Alphabet reported revenue of $90.23 billion, marking a 12.04% increase compared to $80.54 billion in Q1 2024. Earnings per share, EPS, surged to $2.81, up 48.77% from $1.89 in the same quarter last year. On a trailing 12-month TTM basis, revenue reached $359.71 billion from $318.14 billion, a 13.06% year-over-year growth, while EPS climbed to $8.96 from $6.52, reflecting a 37.5% increase. Free cash flow per share, TTM, stood at $6.04, up 10.62% from $5.46 the previous year. The company maintained strong profitability metrics with a gross profit margin of 58.59%, and a net profit margin of 30.86%. Return on assets, ROA, was 16.9%, and return on equity, ROE, reached an impressive 34.79%, indicating efficient use of assets and shareholder equity. Alphabet's debt-to-equity ratio remained low at 0.07, highlighting its conservative capital structure. Over the past 5 years, Alphabet's revenue has grown at a CAGR of 17.3%, net income at 26.9%, and free cash flow at 14%, showing that Alphabet's business has been growing consistently. Alphabet 2025 financial forecast. Analysts forecast revenue for 2025 to be $384.7 billion, a 9.91% increase from 2024's $350.02 billion. EPS is projected to rise to $8.91, up 10.86% from $8.04 in 2024. The average analyst price target is $201.35 with buy rating, suggesting a potential upside of 26.41% from the current share price. Alphabet stock price performance and valuation. At the time of making this video, Alphabet's stock price is $159.28 per share. Over the past year, the stock has remained flat, underperforming the S&P 500, which gained 8.1% in the same period. However, over the past 5 years, Alphabet shares have appreciated by 149.5%, outperforming the S&P 500's 93.2% increase. Alphabet currently offers a dividend yield of 0.5%. The company's valuation metrics are attractive, with a price-to-sales PS ratio of 5.61 TTM and forward PS of 5.05. The trailing PE ratio stands at 19.8, with a forward PE of 16.64. The price-to-free cash flow PFCF ratio is 25.93. These figures suggest that Alphabet is reasonably valued relative to its growth prospects. Based on the last 5 years of valuation, Alphabet's forward P/S ratio is lower than the 5-year average of 22.87, and its forward PE ratio is also lower than the 5-year average of 5.46. These figures suggest that Alphabet is reasonably valued relative to its growth prospects. Alphabet growth potential. Alphabet's growth is driven by its diversified business model and investments in emerging technologies. 1. Core business strength. Search and advertising. Alphabet's search and advertising business, generating $66.89 billion in Q1 2025, up 8.5% year-over-year, remains a cornerstone of its growth potential, driven by Google's 90% search market share and YouTube's $8.93 billion in ad revenue, up 10.1% year-over-year. AI-powered features like AI Overviews, serving 1.5 billion monthly users, and Circle to Search, used on 250 million devices, enhance user engagement without compromising ad monetization. Despite macro challenges, such as the U.S. de minimis trade loophole closure impacting APAC advertisers, Alphabet's ability to integrate AI into search and YouTube, coupled with YouTube Premium's 125 million subscribers, positions it to sustain robust ad revenue growth and fend off competitors like Meta and TikTok. 2. Google Cloud accelerating growth. Google Cloud delivered $12.26 billion in Q1 2025 revenue, up 28% year-over-year, with a 17.8% operating margin, reflecting strong demand for AI infrastructure, Vertex AI, and generative AI solutions adopted by clients like Mercedes-Benz and Verizon. While slightly missing estimates, $12.31 billion, the segment's growth outpaces competitors, supported by Alphabet's $17.2 billion Q1 capex and a planned $75 billion 2025 investment to expand data centers and address capacity constraints. The $32 billion Wiz acquisition, set for 2026, will bolster cloud security, positioning Google Cloud to gain market share against AWS and Azure, though short-term capacity limitations remain a challenge. 3. AI leadership and innovation. Alphabet's AI leadership, driven by the Q1 2025 release of Gemini 2.5 Pro and Flash, fuels growth across search, cloud, and YouTube, with Gemini outperforming rivals in benchmarks and powering 200% user growth in AI Studio and Gemini API. AI Overviews and multimodal search enhance engagement, while Vertex AI's adoption by 500-plus companies underscores enterprise monetization potential. With a $75 billion 2025 AI investment plan, Alphabet is poised to capitalize on declining AI usage costs and new use cases, maintaining a competitive edge against cost-efficient rivals like DeepSeek, though continuous innovation is critical to sustaining its lead. 4. Investment in Waymo. Alphabet's other investment, particularly Waymo, show long-term growth potential despite Q1 2025 revenue of $450 million, down 9% year-over-year, and a $1.23 billion loss. Waymo's 250,000 weekly autonomous rides, a 5x increase from Q1 2024, and expansions into Silicon Valley, Austin, and Tokyo position it as a potential billion-dollar business, with cost optimizations from its sixth-generation driver. Supported by Alphabet's $11 billion cash reserves, Waymo's partnerships with Uber and technological advancements signal strong upside, though Verily and other bets remain early stage and require sustained investment. Risks to consider. While Alphabet's financial performance is strong, investors should be aware of potential risks. 1. Regulatory and antitrust risks. Alphabet faces significant regulatory scrutiny, with the 2024 U.S. District Court ruling declaring Google's search and advertising practices an illegal monopoly, potentially leading to remedies like divestitures of its ad network or restrictions on default search agreements. Ongoing antitrust lawsuits, including a second U.S. case targeting Google's ad tech and a European Commission probe into Android practices, could result in fines, structural changes, or loss of market dominance. While Citi analysts suggest minimal near-term impact on core businesses, prolonged legal battles and potential penalties could disrupt operations, increase costs, and erode Alphabet's 90% search market share, posing a material risk to revenue and investor confidence. 2. Macroeconomic and tariff-related headwinds. The anticipated closure of the U.S. de minimis trade loophole in May 2025 is expected to create a slight headwind for Alphabet's advertising revenue, particularly from APAC-based retailers like Temu and Shein, which rely heavily on Google Ads. Q1 2025 ad revenue of $66.89 billion, up 8.5% year-over-year, could face pressure if global ad spending slows due to tariff uncertainties and broader macroeconomic challenges, such as inflation or geopolitical tensions. While Alphabet's diversified revenue streams, for example, YouTube subscriptions, cloud, provide some resilience, a weaker global ad market could hinder growth in its core advertising segment, which accounts for 74% of total revenue. 3. Competitive pressures across segments. Alphabet faces intensifying competition across its key segments. In search and advertising from Meta, TikTok, and AI-driven alternatives like Perplexity. In cloud from AWS and Microsoft Azure, which hold larger market shares, and in AI from cost-efficient rivals like China's DeepSeek. Despite Google Cloud's 28% year-over-year revenue growth to $12.26 billion in Q1 2025, capacity constraints and slower-than-expected growth, missing $12.31 billion estimates, highlight competitive challenges. Failure to maintain technological leadership in AI or capture additional cloud market share could limit Alphabet's ability to sustain its 22.1% three-year revenue growth rate, impacting long-term profitability and valuation. 4. Execution risks in other investment. Alphabet's other bets, including Waymo and Verily, reported $450 million in Q1 2025 revenue, down 9% year-over-year, and a $1.23 billion loss, highlighting execution risks in these high-potential but capital-intensive ventures. While Waymo's 250,000 weekly autonomous rides and planned expansions signal progress, scaling to profitability remains uncertain amidst regulatory hurdles, technological challenges, and competition from Tesla and Cruise. Similarly, Verily's health tech initiatives lag behind Apple and wearables, requiring significant investment with no guaranteed returns. Alphabet's $11 billion cash reserves support these bets, but prolonged losses or failure to achieve commercial success could divert resources from core growth areas like AI and cloud. However, Alphabet's strong financial AI leadership and diversified growth drivers, cloud and YouTube, mitigate some concerns, making it a compelling but cautious investment. Conclusion: Alphabet Inc.'s Q1 2025 earnings report underscores its robust financial health and growth potential. With strong revenue and earnings growth, efficient capital management, and strategic investments in AI and cloud computing, the company is well-positioned for future success. While regulatory and economic risks exist, Alphabet's diversified business model and commitment to innovation make it a compelling investment opportunity. Investors seeking exposure to a leading technology company with solid fundamentals and growth prospects should consider adding GOOGL to their portfolios. But remember, this video is not a financial advice. What do you think about Alphabet? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching, and see you in the next one.